Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 10% off, you can use code A1T10. Again, that will be a 10% discount off of any of their trials you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey guys, I just wanted... All right, good morning. Hello, everybody. Welcome back. Hope you're doing well. It is Wednesday, my dudes. If you're familiar with that meme, I love that meme. We are back for what is low-key a really big day in the stock market. Why is it a big day? Well, it's because we've got NVIDIA after the bell reporting their earnings. Will this cause a big old fat move one way or the other? We'll have to see. Also, if you guys could just let me know, is audio okay? I just want to make sure. Check. I think we're good. Okay. If my audio comes in weird, I've had some issues with this mic at home off and on. So hopefully everybody can hear me okay and we're good to go. Okay. Can I address something? We got people saying gold is crashing in the chat. Where? Where is gold crashing? Look, if you look at like a 1-minute chart, yeah, you could maybe say, oh, that looks pretty ugly. But scroll out, zoom out, and relax. Take a chill pill. This thing has been in a monster uptrend, and it's pulling back. It actually could pull back a lot more and still be in a strong uptrend. Metals are finally cooling off a little bit. We've had this huge move up. So if you're somebody in the audience, you're like, Nick, what's going on? Gold is crashing. Like I jump on here and I see people already, what's wrong with this? Gold is melting. Please explain this. Look, gold is doing very golden normal things. Okay. When you have moves up like this, it is normal, even in an uptrend, for pullbacks to happen. Now, I want to say this carefully. I'm a buyer of pullbacks on gold and silver, but just because I'm a buyer on pullbacks does not mean I know it's going up. Here's one of the most, if I hear somebody say this, I know they're not a profitable trader instantaneously. If somebody says, and you can take this to the bank, anybody you see on social media who says this, I know that they're not a profitable trader if they say it. You ready? If somebody says, I know gold is going to go up from here, they're not a profitable trader, period. Point blank. You don't know anything. The markets, you never know anything. You think something might happen, but you never know. If you know something, why do you have a stop loss? If you know something, why are you ever in drawdown? You never know for certain. Markets are not that predictable. I've been an advocate of this since the dawn of my YouTube channel. You never know something. You only make educated guesses, okay? Get that out of your dictionary as a trader. You do not know anything. And to be completely honest, it's actually been a very humbling mindset shift for me to realize that in life, you don't know a lot of things. Life is unpredictable. The markets are certainly not predictable. And there's going to be times where you have crazy uptrends and they pull back, and they might actually pull back more, right? We could see gold go back to 2,800. I'd still be overall bullish if the fundamentals still make sense. You want to talk about a chart that looks a little uglier? Pull up Bitcoin. There you go. That's a chart that looks a little bit more dire. So here's the thing. I know there's a lot of people who are interested in stocks, gold, Bitcoin. Let me just address gold for a second. This is not a broken chart. Now, I focus on the daily chart because this can be super deceiving. I don't really like the low time frames personally because they're super emotional, deceiving. They don't really give you actually full context to what's going on. Look, we live in the human brain operates on a 24-hour cycle, right? It's built into our very core on this planet. We go around the sun, right? Unless you believe the earth is flat like I do. The idea is that daily charts make a lot of sense because daily charts give you context to like our everyday lives. And most traders, most human beings are operating on kind of a daily chart type of time frame, mind frame. So what I mean by that is gold really selling off? Is it really crashing? No, not at all. It's been flying higher. Did it feel like it was crashing when it was at this same level a couple weeks ago? No, it felt like it was cratering, or it was cratering upwards. It looked meteoric to the upside, right? And now that we're coming back to that same price from the other side, people are freaking out. Is this chart broken right now? No. To me, that would signal, I think we probably go higher there. If we don't, though, I'm not going to panic, freak out, and blow my account. That is foolish. If you're going heavy long gold right now, thinking this thing has to go higher, again, I go back to my previous statement. If you think anything has to happen in markets, or something's going to happen in markets, close down your account, call your broker, say, hey, I'm just going to withdraw everything because I shouldn't be trading. I'm not right for this. Okay. I'm not trying to be mean. I'm trying to help you. To be completely honest, I am being as transparent as I possibly can. You do not know what's going to happen ever in markets. Get it out of your brain. You don't have to know what's going to happen in order to make money overall. You can manage risk appropriately, make educated guesses, and you're going to get it wrong sometimes. You're going to get it right. You're going to get it wrong. How do you manage it when you're right? How do you manage it when you're wrong? That's what makes you profitable, because nobody knows, not me, not you, not anybody. Nobody knows what gold is going to do for certain today or tomorrow. Okay? With that said, this is not a broken chart. Gold coming down to this area and testing this area is not a broken chart, in my view. That could certainly still happen. We could actually break this level, and I wouldn't call that chart dead either. This is a really powerful upward trend that's finally taking a breather. So I'm not worried about gold's momentum to the upside unless you break this level. If you break this level, okay, I get it. Momentum is broken. This chart looks broken. We're done with the idea, right? That's the game plan. We don't know what's going to happen. I like this area for a possible buy. If this level goes further, I might try again, depending on what the fundamentals look like at that time. Okay? That's not a broken chart. You want to talk about a broken chart? Broken chart to me looks like Bitcoin. This looks like a broken chart. Take a look at the daily chart. We said it back on Monday when this candle closed like this. This is seriously concerning. For the last several times you've been at this level, buyers have quickly wicked that low and pushed price back up. We now see Bitcoin's price action behavior failing out at key levels of support. So that's the thing. You just have to be careful with Bitcoin. This thing has momentum now to the downside. I would actually say that you might have just entered into straight up a bearish trend for Bitcoin at this moment. This trend line completely failed out. Key level of support completely failed out. We have to mark this as resistance. Am I going to short Bitcoin? No, because I don't have a reason to. At least according to the EdgeFinder, there's no confirmation for a bearish or a short position on Bitcoin. Would I short Bitcoin under the right context? Possibly. Possibly I would. Small size, be careful with that kind of thought process, but possibly, right? It not at these levels, but if EdgeFinder was giving me a bearish reading and we poked back up into this resistance, there's a good shot I would actually take that trade to the short side on Bitcoin. Bitcoin is heading to the fair value gap to fill that in. Call it what you want. I think you just have a zone to zone here. I think, you really don't have key support, fair value gap, whatever you want to call it. It's all the same stuff. Basically, just key demand is not till you get down to 72,000. At least in my view here, there is nothing stopping this chart from making a move down towards that 72,000. Anything could happen, but this is kind of your last line in the sand, and that's not, really a key level that I would, we haven't tested this level very well. So for me on Bitcoin, could totally see 70,000, 72,000 come into play pretty quick. I mean, this thing moves very, very aggressively, and we don't really have key support until you get down to that level. So if I'm watching Bitcoin, I'm definitely cautious on that chart. We got stocks here, flat on the day, but red on the week. If we get a red close on the S&P today, that would put us in order for 1, 2, 3, 4, the 5th day in a row to the downside. Yesterday, we did have an intraday bounce. Will we go down and test those lows today? We'll have to see, but sellers seem aggressive in this market at this time. In fact, it's not quite bearish, but S&P, Dow, Bitcoin, I mean, the EdgeFinder is straight up risk off right now. EdgeFinder is straight up risk off. It's got stocks as a bearish reading the last, well, not bearish, but neutral to slightly red here. But specifically what has been bearish for a couple weeks has been yen bullishness. We keep talking about this, but the yen bullishness is pointing to some serious risk off attitude in this market, right? I'm currently short Swiss yen. I've been in this trade since around this area. I do think that this has potential to continue to go lower, but I think right now we're testing kind of a long-term level of support on Swiss yen. But I actually think that we could see that level get broken. I don't know what happened to my, I had charts marked up here for Swiss yen. But yeah, we have what I would say a pretty bleak outlook for risk assets at this time. With Swiss yen sitting at support, what I'd like to see would be a failure to hold that area, which could potentially signal a leg lower for yen crosses. But we'll see. We will see. Also, real quick, if you're not already in our Telegram channel, we are doing something this week that we did last week. Last week, we did an EdgeFinder giveaway. We gave away a free copy of the software. If you want a chance to enter the giveaway, completely free to join, we'll drop the link to our Telegram channel. Then what we'll do here is we will drop let's do this. Let's drop the giveaway link. 1 second. 1 second. Join our Telegram channel if you have not already. I'm about to drop the EdgeFinder giveaway link. Where is it? Oh, okay, here it is. Oh, it's already in there. I'm blind. Okay, if you're in the Telegram channel, we dropped this yesterday. Take a second, join the Telegram, click this link. You can throw your name in the hat for a chance to win a free copy of the EdgeFinder. Make sure to join the Telegram anyways. We post like bonus content in there, daily chart markups. We do market research and share it with our viewers there. Like you can see all this stuff that we're putting in there. It's completely free value. So if you're not already in there, take a second, join the Telegram channel, and throw your name in the hat for a chance to win the EdgeFinder for free. Why is the yen strong? Great question. It's very easily explained when we look at the economic heat map, specifically for Japan, which is a new feature on the EdgeFinder. GDP growth beat forecasts substantially. So we have growth in Japan, like economic growth. So the yen should be strong. Why? Well, currency tends to trade based on the state of a economy, whether you're talking about the US dollar for the US economy, the euro for the European economy. If you have a lot of growth, it typically causes the currency to look stronger relative to its peers. But the yen has a double-edged effect. A lot of other currencies are seeing their economies weaken, which causes their currencies to weaken, right? But on top of that, Japan is in the opposite camp. They're seeing strength come into their economy. GDP growth, really impressive here, 0.7% compared to the forecasted 0.3. That's a pretty big jump in GDP growth. Services PMI, also an indicator that people in Japan, key hiring managers and sales managers and people who are involved in the services world, it basically perked up here, showed substantial forecast to the positive. We've been in contraction territory for Japan's services PMI outlook. Now it's positive. So you're getting this change in character. Retail sales, the consumer in Japan is going out and spending more money than usual or more than expected. Inflation ticked up to 4%. 4% inflation. So the idea here is the Bank of Japan needs to hike rates. When a country is hiking rates, we saw what happened to the dollar when the Fed rate hiked like crazy in 2022 going into 2023. The dollar was a monster. Do you guys remember that? Some of you guys might not have been trading. Go pull up a chart of the dollar in 2022. You'll see what I'm talking about. The Fed, U.S. Central Bank, was hiking rates. They were raising borrowing costs to try and slow down an economy that was overheating. That was the idea. And trying to get inflation under control. How do you get inflation under control? You raise interest rates. You slow down the economy a little bit. That's the idea. You don't want inflation to go crazy. And if people are out there spending money too much, there's inflation. So you've got retail sales up. You got GDP up, services PMI. Everything is on the up and up here, it seems. And inflation is rising too. So what is the Bank of Japan likely to do next? Well, this is why fundamentals are leading, right? We're looking into the future. What's the Bank of Japan likely to do next? Likely, they want to hike rates. PPI, Producer Price Index, which is another inflation read, higher than forecast, 4.2 compared to 4. They've got inflation there. Unemployment rate ticked down to 2.4%. 2.4% of the population looking for jobs. That is pretty good compared to other places. I mean, the U.S. has low unemployment rate, but we don't have 2.4%. That's pretty incredible. It's one of the reasons Japan is considered a safe haven economy. They have very low historic unemployment. And so you have Japan looking really good for the first time in some time. So meanwhile, other countries are seeing some weakness in their economy. So that is why I have been and continue to be bullish on the Japanese yen and bullish on things like TLT. TLT also has high correlation to the yen. I've talked about this trade quite a bit on the channel. How do you do fundamentals for indices? Like we just did, we use the heat map. We study what the data is showing us and how it could impact stocks. If you want to trade stocks, gold, indices, whatever you trade, I highly, highly, highly recommend you do not ignore fundamentals. So many traders ignore fundamentals. It's crazy. And it's really what drives these markets to move up and down. Everybody wants to think it's all just, head and shoulders patterns and liquidity grabs and manipulation. And it's just, you can go down that rabbit hole if it makes you feel better, but that's not what moves the market. What moves the market is true underlying fundamental trends one way or the other. So, why are stocks down here recently? Well, growth concerns in the United States and other places with tariff worries kind of mounting. A lot of key companies, specifically Walmart, like for example, signaled that they see contraction in their sales revenues in the coming year. They're a little bit worried about the future of the consumer. And that's a huge indicator. They have a lot of data. Walmart is a data warehouse on the consumer. And so if they say, hey, things are looking a little bit rough here, right? Well, then maybe you want to pay attention to that. That's what the stock market's doing right now. You also have several other reasons. You have high inflation. Fed doesn't look like it's going to cut rates this year very much. So yeah, you have things that are causing this market to worry a little bit. We'll see if those fears get shrugged off later today with NVIDIA earnings. If you're somebody watching indices, that happens at between 4 and like 6 p.m. today, Eastern time. So yeah, we'll see. We will certainly see. By the way, the economic heat maps are available within our software, the EdgeFinder. If you'd like to try it for 30 days, we'll drop the link in the chat to where you can find out information about getting a trial set up on the EdgeFinder if that's something that you're interested in. What's the criteria to win the EdgeFinder giveaway? All you have to do for a chance to win the EdgeFinder, step 1, join the Telegram. Step 2, put your name in the hat. That's all you got to do. We randomly selected someone last week, and we will randomly select another one this week. So definitely throw your name in there if you have not already. So we'll see. I mean, I like yen pairs to the downside. I like TLT to the long side / JPY pairs to the downside. Those two move together typically. But we'll see. I decided not to sell calls against my TLT position, which I think is so far turning out to be the right idea. I do think that TLT has potential to go back and test levels like 94. This is a bond ETF, by the way, which if we see growth concerns continue to rise, TLT probably could have a good little run here off the idea that the Fed may still need to find a way to cut rates on cooling economic data, maybe not inflation, right? This is where we keep talking about that stagflation type environment, right? We can look at inflation and understand that it is rising in the United States. You've got inflation rising, but don't forget, at the same time, growth metrics have been missing expectations. GDP growth, services PMIs, retail sales, those things are missing expectations. JOLTS job openings were weak. So this thing, which used to all be blue, right? It used to all be looking pretty solid for the U.S. economy. Well, now it's flashing red. And I'm not, I say this often when I'm talking about economic data. I change my mind based on what the data is telling me. I'm not a hero. I'm not a fortune teller. I just trade based on what my system shows me, right? So if the U.S. economy is missing expectations, that's what I trade off of. That is my primary that's my primary gauge. If we're missing expectations for the economy, I'm going to be more cautious on stocks, maybe look to be more bearish on the US dollar, but certainly just be a little bit more risk-off focused. And then if you get everything strong, I probably want to switch more into being bullish on risk assets, things like that. Again, I follow the trend, not just on a technical basis, but on a fundamental basis, right? Fundamental trends are very, very powerful. That's why we focus on this so much. Because this stuff, it really is what genuinely moves the market. This big slide that we saw on Monday, this came out of a, where's Monday? Yeah, Monday here. So the follow through to the downside, what flipped us back into a bearish kind of movement here was consumer confidence coming in light. So you had consumer confidence come in light, and the Michigan inflation and consumer outlook. We've just been seeing a lot of economic indicators pointing towards slowdown. And that is why, I've been consistently cautious on stocks here recently when they tagged those all-time highs. Same thing for the NASDAQ. NASDAQ got really hammered here recently. Russell has been getting killed. I mean, here's the thing about the Russell. The issue for the Russell is that if the U.S. economy is missing expectations and inflation is high, that is straight up bearish for the Russell. That does not look very good for the Russell. The Russell is small cap companies. Small cap companies in the USA, don't have the type of coffers that an Apple or an Amazon or a Microsoft has, where they have plenty of capital and they don't need to borrow money, right? These companies a lot of times are growing and they do have higher debt and they require borrowing in order to grow their companies. So what happens is if you see these things in an environment where growth expectations are kind of slowing and inflation is still sticky and problematic, so the Fed's not likely to cut rates, that dynamic is problematic. Here's my issue with this, right? So you might say, well, Nick, are they going to cut rates dramatically right now because growth is missing expectations? Here's the problem. At 2.3%, GDP is not crashing. It's just missing the high expectations that we had. So the problem with that dynamic is if you're the Fed, here's the thing. If you have sticky inflation and slow growth, are you going to cut rates? The answer is no, because sticky inflation could get way worse. It could be devastating to our economy if you cut rates too soon, too fast, and cause inflation to go crazy and cause a massive, massive recession, right? So they won't cut rates very quickly. But then tag that in with slow growth. You say, well, growth is slow. Is it? Not really. It's missing. You have to understand, we're missing some expectations, but we're not in like European growth levels. We're not like low hundredths place digits, right? Or tens place digits. If we take a look at the US or the UK, right? 0.4% GDP growth. Europe, 0.1% GDP growth. So we're not in that situation. The ECB is cutting rates because they're in that situation. They have kind of sticky inflation, but it's not as bad as the US's inflation, but they have a lot less growth. So they're like, okay, we need to save the economy. The economy is not growing. We're struggling here. We need to cut rates. Okay. Dollar, however, has 2.3% of GDP growth to work with. The Fed is more likely, in my opinion, to let that number go lower before they have to cut rates, because also jobs data doesn't look that bad. We're sitting at 4% unemployment rate in the US. Here's the problem. The Fed is likely not to cut rates and be okay with this number rising. Unemployment rate could go up before a while, even before it really catches the attention of the Federal Reserve to the point where they need to cut rates. So they have a sticky inflation problem, right? Sticky inflation, but jobs are not falling apart yet. We'll get more information on jobs next week. But here's the thing. The Fed has room to let jobs weaken before they feel the need to cut rates. Once you understand what that means for the markets, it's very powerful, right? So my thought is we are not in a stagflation environment, but we're potentially headed towards that, right? Is growth bad right now? No, but it's missing expectations and threatening the idea that we could get slowing growth and rising inflation at the same time. Stagflation is very bullish for metals. That is part of the reason why I still like gold and silver. They're having a little bit of a pullback here today. I'm watching gold. I'd potentially be interested in here at this level and possibly at this level. If I take those trades, I will share them inside of our Discord channel, which if you'd like to join the Discord, we'll drop the link here in the chat to where you can sign up for that. We have a free version and a paid version. The free version, you won't be able to see the signals, but you'll be able to see some analysis for free. And the paid version, you'd be able to see all the trade signals that we're sharing on live brokerage accounts, every trade I take, full breakdowns, explanations, etc. Here's the free one if you'd like to get started with that. And then Chandler, if you don't mind, maybe you could just drop the link to the talk to as well, to where people can speak directly to our support team. If you'd like to review our membership options, our pricing choices, things like that, if that's something you'd like to explore, I'd love to have you in the group. Love to get to know more traders in the trading space. We're always looking for more. I mean, obviously we're selling memberships, right? So I'm not going to disguise that, but it's a membership group where you get real trading value from people, myself and Chris Pulver, for example, trading live brokerage accounts. Chris Pulver manages like millions of dollars for clients. So We are real traders in the trading space, sharing our genuine experience in the markets. Speaking of real, genuine experience, up next, we got Forex James taking over the show here for a little bit. I'm going to stick around with James just for a few minutes, and then I got to run for a podcast. But we're going to just set that up. We'll be right back after this quick break. Like I said, if you want information about the membership, send us a direct message using the link that just got dropped in the chat. We'll be right back with Forex James.
Attention A1 Trading Show fans. If you're interested in getting free access to the EdgeFinder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, we're back. Hey, James, how you doing, man?
Hey, Nick. Yeah, I'm good. Thanks. How are you?
I'm good. I'm just going to stick around with you for a minute, and then I gotta hop off for a podcast. But just wanted to get your thoughts on some things, see where you're at. What are you? What's your latest stuff you're watching?
I had to realize some losses yesterday, so I'm not in a great mood. Took a loss on, so went long copper. That one took a loss. I also was dollar cost averaging into dollar Swiss, but risk metrics were hit, so I had to cut that one as well. So yeah, not too happy today, but still got some positions going. So took a short on Euro Australian this morning. I'm still fundamentally bearish on this market. So I think it's had a pretty strong rise as we've seen the commodities fall off a little bit, but I'm still also bullish on commodities. So I'm still long on silver. This one, of course, has fallen off a little bit. So portfolio is essentially completely flipped up. It was very heavily green, and now it's sitting in red. But you know, that is the way it goes sometimes. And still sat in Swiss yen shorts and Euro yen shorts as well. But yeah, that's about it.
It totally happens to everyone. Yesterday I had a silver trade stop me out. So, you know, it's part of the game. I was long silver. Well, I've had one win, one loss on silver prior to this. So I went long silver around here. That ended up being a profitable trade, which I got trailed out of around here. But then I re-entered that trade there, got stopped out. So I'm one win, one loss, and I re-entered again here at this level, which is about the same area that I entered a couple weeks back. So giving it another shot. I still like the silver idea. I still like metals, but totally copper, you know, big down move here. Copper and silver kind of like cousins. They kind of move in the same direction. They've been pretty volatile here recently. The commodities, like I said, I still like silver for the reasons I was just chatting about. I think you heard some of my rant on the stream a moment ago, but I still like silver. I think it has potential to the upside, but it's part of the game, man. It is frustrating though. Like anybody who tries to tell you in the trading space, like an influencer or something, oh, just act like a robot. Like don't let emotions get to you. Look, you're a human being as a trading operator. You're not a robot. It's okay to be like annoyed by a certain position. What's just not okay, and I'm sure you don't do this, James, is like you don't act on your anger. Like even if you're like, dang, that's annoying. Like I hate that I got stopped out today. That's fine. Just don't do anything with that, right? A lot of traders, what they do is they massively over leverage, or they get angry and they like do something stupid, right? So maybe that's the middle ground. It's like it's okay to feel that, just don't do anything with it.
It is, yeah. It's worse as well because I'm sure you get it as well when you are in. Obviously, I'm not even slightly as big as you, but when you have people watching what you're doing, it feels much worse because you know that you're going to have people looking at that loss. You'll have people saying, "Why would you do that?" or "What's that all about?"
Yeah,
and the thing is,
I knew it was going to do that. Why didn't you know that?
Yeah, the thing is, this is the first sort of losing period on the account, so it's like just a big red period. So it looks horrible, but obviously in relative to the account size and things, it's completely fine.
Sure.
But yeah, it's just that feeling. But of course, you know, like I said, it's part of trading. You've got to deal with it.
Drawdown is it is always frustrating. It is always painful. It's never fun. I mean, you can watch 100,000 videos on best trading strategies and try and avoid drawdown as much as you want. You know everything about the markets, but you're just never going to be able to fully avoid drawdown. It's inevitable. It's the most annoying and probably the reason why most people can't trade long term is because they get hit with a drawdown and it causes them to quit, right? That's people quit during drawdowns. They quit during everybody can win a trade, but when it starts causing you to sit there and be like, gosh, this sucks. I've been stuck in this position for a while, or my accounts, I haven't hit fresh highs in my account for 6 months or something like that. I mean, what might surprise people is that not only drawdown, and when I'm saying drawdown, I'm not saying like, oh, I've been in drawdown for a week, this really stinks, and then I'm back to all-time highs. I was in a drawdown in 2022 the whole year. Like, it took a whole year for me to get back just to where my previous high in the portfolio was. So look, it sucks, but drawdown is hard. That's why trading is hard.
It is. Just to slightly change topics as well. So I messaged, for obviously people watching, I messaged Nick this morning asking about Webull, because essentially what I do is called spread betting, which is only basically legal in the UK because it's classed as gambling, but that's UK regulations. And because I'm moving to Indonesia pretty soon, I'm looking for a new broker. So Nick, what I was wondering is, I looked on their website, and how do you trade the FX markets with Webull? Do you have to do it through TradingView?
Oh, yes. I should have thought about this because I know you're an FX trader. So Webull doesn't offer FX. They do offer pretty much everything else. You could trade futures FX, like you could trade dollar contracts or euro contracts. I know some people prefer to do that. When I gave you that answer, I definitely gave you the American version, which is, we have a lot of trouble trading Forex in the US,
Right.
especially with any kind of leverage. I know you do too in the UK. So there's some limitations on certain things, but in the US, we can't even trade CFDs. So if you're making the move, but you want to stick with FX, that I'd have to think a little bit more about, because you might just want to select a brokerage that's, kind of more accommodating.
Yeah, that makes sense, because the idea was to do it under Elite Traders as a sort of business account, but we might have to keep it separate from Elite Traders, keep it personal then.
Yeah,
that's fine.
I mean, you could also go with a long-term sponsor of the channel. I know we're talking sponsors here. You could check out Oanda. Oanda is the most legit brokerage you could possibly have. I don't know if you saw this news. Also, they got recently bought out by FTMO, which is absolutely insane, because Oanda is a massive company. It's a massive brokerage, and they got bought out by a prop firm, which is clearly a massive business model as well.
It is. Yeah. Okay. I'll have a look. Thank you.
Yeah, for sure. I've used them for years, and for everybody who is watching on my channel specifically, we do have welcome bonuses available for Oanda. So if that is something you're interested in, maybe Chandler or James, we could drop the link to our brokers page where you can find out information on that.
Yeah.
So not sponsored, just kidding. It is actually completely sponsored. Oanda is a sponsor of the channel. Don't get me in trouble. But yeah, no. Let's get back to markets here before I got to go, James.
Sure.
So yen pairs, are you trading them at all?
Yes. So Euro yen and Swiss yen are the only ones.
Okay, you got both.
Moment.
Okay, cool.
Yeah. So I think the euro is I'm still very bearish on it, but not. I'm a little bit cautious compared to how I was a few months ago. And Swiss yen, obviously, we've got a potentially huge rate differential coming in the pipeline. So I'm just positioning for that worst case scenario. I'll take a small loss, because obviously the idea is to essentially dollar cost average in on sort of the weekly and the daily. So I'm looking, really, the criteria for me to stay in this trade for a long period of time will be to see the break of and retest of this weekly daily support that we've got at 166. But yeah, that's basically it until we see some more developments, like a clear break of these supports. On, I think it's across most yen crosses. Actually, we've got pretty serious support. So yeah, once we start breaking those levels and continue downside momentum, maybe I'll scale in a bit more heavy. But for now, it's just these two.
Yeah, it's been like you said, across a lot of different yen pairs. You got pound yen sitting near like a long-term level of support. CAD yen coming down to a key level here. The Australian dollar, huge level of support against the Japanese yen here, around 94.25. And then Swiss yen, yeah, hitting that support, seeing some bounce off of it here today. We'll see if there's any attempt to go back, test those lows and break them out to the downside. But I'm kind of in the same camp. I got short Swiss yen with the willingness to add some to it, but never got the chance to add. So it has just completely gone down, now bouncing a little bit. We'll see if that can make any kind of follow-through move to the downside. But I went through right before you jumped on just kind of my thesis on the Japanese economy still looking real strong. That heat map has been great for just kind of identifying that concept. Also, just a quick plug for James. If you guys aren't using the EdgeFinder and you are considering it, we do have a promo code for James. If you want to support him, he gets a cut or a kickback of any EdgeFinder sales. So if you ever want to support James, if he's your favorite content creator and you want to help him out, use code ELITE at checkout for the EdgeFinder. You get a discount on it. James, I'm gonna back out, give you the floor here for a little bit. I gotta run, and you got it from here, man.
Cool. Thanks, Nick. See you later.
See ya.
So, guys, how is everyone doing? Hope you're all having a better week than I am. Sorry, my camera's a bit strange today. It seems really zoomed in. But anyway, it is what it is. So let's just see. Yeah, I'm not really looking at anything short term at the moment. I'd say Euro AUD is probably the shortest term trade I've got. So this position is dollar cost averaging, just looking at a potential move to the downside here. So it's a sort of very range bound on the daily, which for dollar cost average, for a mean reversion strategy, which is what I'm implementing here, this is great, really, because every time we get some sort of high, it's pretty swiftly followed by some downside movement. So that's the plan here. Essentially, just going to add in a couple of short positions, nothing too heavy. Nothing too heavy. My account's already taken a bit of a hit this week, so I'm not going to be too aggressive or too risk heavy. Quite happy to just sort of add in if we get some creep up. If we don't, I'll take profits and start rectifying that downside I've taken. Pretty good short, CAD yen scalp and 2 long-term shorts. Very nice. Euro yen's been moving sideways since Monday. The markets have been very, very strange this week, actually. I've not really seen anything. It's essentially what we had last week was almost the opposite. So last week, very bearish movements on a lot of the yen crosses. So we had this really nice downside. This week it's just been stuck ranging. Similar thing here with silver. We had a really nice run up followed by a swift downturn. Same thing with gold. It's been a very choppy week, I would say. So for anyone that hasn't taken a loss or profited, then well done, because you've performed better than I have. What am I seeing on gold? I'm still very bullish on the commodities, specifically metals. So I had in my stream this morning, we had a few people talking about going short gold. Now, I'm very mixed with gold because I don't want to buy and I don't want to sell. So the reason I don't want to sell is because the indicators or the economic indicators are suggesting bullish. Also, I'm not sure how this works, but we also saw on the stream that COT data is reading 0, but it is in favor of longs here. And this is for the A1 guys. I'm not sure if I'm being stupid or if that's reading wrong. I don't know. Anyway, the EdgeFinder is suggesting a very bullish reading with a score of 10. So, I don't want to go short. Retail is already mainly short as well, so I don't want to get in with that crowd. But the reason I don't want to go long is because if we pull up gold on the COT history, we can see that they've been decreasing positions. So they've gone from 90.23. This is long percentage, by the way. So they've gone from 90.4, and then now obviously been decreasing over the past couple of reports, and now they're down to 83.6. So although that's not bearish, they are still quite heavily long. If they're slowly selling off positions, I don't know if I want to start buying in and essentially doing kind of the opposite thing. And obviously the long-term trend of gold has been very, very bullish. So to me, selling it is a little bit pessimistic or optimistic, whichever way you view it. But yeah, I would observe to see how price reacts off sort of the next few price levels we've got around here. If we can see some sort of bullish reaction, whether it be a bullish engulfer or a big wick down, it could be anything, I would start contemplating going long. But to be honest, silver remains the number one for me because we've got the opposite of gold in terms of the COT history. So again, if I just pull up the silver data here, we can see they've been adding positions. So they've gone from 71.14 and now up to 73.64. So it tells us they are adding into longs. So that's completely fine for me. So yeah, I'm a bit more optimistic on silver than gold. Although, you know, I'm definitely not bearish on gold. I'd suggest the easiest path really for both of those metals is to the upside. Okay. Why are you bearish on Euro Yen, CHF, JPY, and not New Zealand Yen? Babu, I am. I'm bearish on yeah, all the yen crosses really. So New Zealand yen, Australian dollar yen, pound yen. I'm bearish on all of them. It's just Swiss yen is my number one pick out of all of them. And then it would be Euro. Actually, sorry, then it will be CAD yen and Euro yen and then the rest of them. But yeah, I'm sort of getting in as I can. When I see an opportunity, I'll jump into it. Can you pull up Swiss on the EdgeFinder? The EdgeFinder doesn't have a Swiss heat map just yet. So if you want me to look at a specific currency pair, a specific currency pair, I can. But unfortunately, actually, sorry, I'm lying. Well, slightly. The EdgeFinder doesn't have it, but I have it personally. So this is my own version of the EdgeFinder. It's specifically currencies, not currency pairs like the EdgeFinder. But we can see the Swiss GDP's decreased from 0.6 to 0.4. We can see unemployment has ticked up from 0.28 to from 2.8 to 3. Inflation rate actually went down, so that supports a rate cutting narrative. Inflation rate month on month stayed the same. Their interest rates were held at 0.5, but expected to cut in this year. So yeah, it's generally just not looking good for the Swiss. And obviously, Nick showed you the yen heat map as well. I'm sure the EdgeFinder is probably a lot easier for you guys to see and understand. But USD, Euro, Pound, and Yen heat map. Yeah. Can you look at Pound New Zealand? Yes, we can look at Pound New Zealand. Pound New Zealand here. Yeah, it's had a rocket. Actually, the pound is doing very well at the moment. I was looking at pound CAD this morning, and it's very difficult to be a bear on the pound when it's clearly being very bullish. But I just don't really have any reason to be long on the pound at the moment. There's not really much. I mean, the gilts are going down, the UK gilts, so that's a positive sign for the pound. We also had higher inflation, which dampens the rate cut narrative by the Bank of England, but I don't think it's going to stop it. I would expect the pound to start coming back down at some point. No, obviously, you know, that's definitely not professional analysis, but I think it's a little bit overvalued right now. Can I have a look at the DXY? Of course. So the DXY is showing some signs of a recovery per year. Yeah, I'd say possibly. I use it sort of very loosely, just because we're currently at sort of a minor support here on the H4 timeframe at the 1.06.35. And it seems to be stalling, consolidating. It seems like a lot of this bearish momentum might have faded out now and priced in. But I wouldn't really want to go and buy at that level. I'd need to see a slightly lower price, probably around 1.05.5, I think would be where I'm starting to get a little bit bullish in terms of price action. But currently, it's not enough, especially with the EdgeFinder heat map on the US dollar, which I'll show you. I'm not sure if Nick showed you this or not, but I'll show you again. It's looking a little bit red. So I'm definitely not looking to buy it just yet. If we could start seeing an uptick again in data and start seeing some blue on here, maybe I will look to buy it a little bit cheaper where it is. But for now, yeah, it's a little bit rough. Although the data is not necessarily very bad, it's not where it was. James, why Indonesia? Just to go and explore Asia. So obviously I live in the UK at the minute. So for example, Greece, Italy, Spain, France, all that sort of stuff, it's cool, but I've done it and I'm bored. So if I have the opportunity to go and live somewhere else, I want to go and live in a completely different part of the world where I can go and explore that area. And also the taxes are quite beneficial. I can quite easily obtain a 1 to 2 year visa there as well. So yeah, there's quite a few benefits. And Jakarta, where I'm specifically looking to move to, seems quite cool, good for networking and things. And then it'll probably be Thailand. I'm planning to stay in Indonesia for 2 years, then move to Thailand after that. Russian, no problem at all. James is Indonesian. I'm not Indonesian. If anything, I'm Chinese. Dubai, absolutely not. South America. I'd love to go to South America, actually. It does look really good. But yeah, definitely not Dubai. Scammer Central. Yeah, definitely a no-go zone for me. So let's just see. Let's do a checkup. Oh, nice. Little bit of a switch up here on silver. It's looking a little bit rocky, but let's see if we can get a nice bullish push off this level. I think I could go into the weekend with a smile on my face, because at the minute, it's a bit difficult. Euro AUD, nice little reaction here on the H4. That's good to see. After 5 days, I'd hate my life. Dubai's just not somewhere I've got any interest in. It's very materialistic. It's every person I've seen that has a social media following hasn't been someone I'd want to associate with. So I'm quite happy going and living in some place in Asia, doing my own thing, get a little apartment somewhere, and go and eat noodles because they're my favorite food. Actually, I don't even know what they eat in Indonesia, but maybe that was a bit racist. Today I lost $1,000 on gold. Cloud, what position were you in, long or short? To be honest, I think you could have got wiped out either way on gold today if you were taking a short-term trade. Jack, you see me. Sounds really creepy, but okay. Little stalker. Comes South Africa. Yeah, I think it's on the list to visit. I'm not sure about moving there, but yeah. Long with big lots. Oh, that's a bit brutal. Nature, experiences, culture, connection of materialism. Yeah, it does sound nice. I think somewhere like South Africa would be more for when I'm older or looking to settle down a bit more. Because at the minute, I'm quite happy. I love Asia. It's like, so far, my favorite place in the world. So I'm quite happy spending my youth traveling around and all that sort of stuff around Asia and trying all of the different foods they've got. I'm a big food guy. I'm not sure if you can tell with my increasingly large chin or double chin. No, I've never been to the US, Alan. I don't want to go to the US. I was filing US taxes last night. I've got a call with my accountant and my consultant after this stream, actually, to go through it all because it's such a pain. I'm trying to get tax credit, obviously credit for the tax I paid in the UK because I don't want to pay double tax on the same income, essentially. So it's been an absolute nightmare. The US is a bit scary in terms of taxes and legal things. Because I've got to pay state tax and federal tax. What is that about? Why do I have to pay 2 taxes? In the UK, you just pay 1 tax and you're done, and it's pretty easy. I would like to travel America, but definitely not moving there. How do you find instruments you like to trade, or do you trade everything? Hold on, I've just realized I'm a little bit over time here. I just need to make sure I'm not running into Chris's time, because Chris Pulver is on after me. So how do I find instruments I like to trade? If you mean in general what I specifically like to trade, then you would just look at sort of the behavior of the market, spend time in live markets and see, does your analysis tend to work out? Does it suit the way you trade? Do you view it in the right way? Do you understand why it's moving? But if you mean how do I find a setup, then obviously EdgeFinder number one. So I'll go to the EdgeFinder. I will see what's bullish, what's bearish, what's neutral, what's smart money doing, all that type of fun stuff. And then I'll go and zoom in onto that one. I'll go and look at what the central bank policy is. I'll look at inflation data. I'll look at the labor market. All that fun things. Do you trade USD try? No, I don't trade USD try. I'm fairly sure it's got really large spreads and high swaps. Guns don't kill people, the people do. But I want to get into that. Where's that come from, Alan? Does MT4 scam? No, MT4 is just a platform. If anyone's scamming you, it's a broker, not MetaTrader. US taxes, the UK taxes go to royal family. Yes, part of it does. But to be honest, the UK is absolutely doomed, so I don't care what they do with my tax at this point. I've got to pay it regardless, so they can do what they want. I won't be here much longer. I've got to actually tell the taxes, which is HMRC, that I'm leaving pretty soon. If I'm able to get citizenship somewhere else, I will quite happily give up my UK citizenship. I don't want anything to do with this country anymore. If you're ever in the Atlanta area, hit us up. You know what? I actually might be. So I've got to go and open. Actually, I'm not going to bore you guys with that. I've got to go to Miami at some point, though. So I'd be quite happy to fly over to Atlanta. Excuse me. Don't know how far Atlanta is from Miami, but I don't mind catching a flight. Catch flights, not feelings. When will the video report be released? I think Nick said it's after the closing bell. I don't know when that is. I don't do stocks, so I think Google is your friend there. USD bear, bull, or neutral? I would say neutral to bull, but of course it's very difficult to be bullish on the US dollar when it's just been moving to the downside. So that's kind of why I'm sitting on the sidelines in terms of dollar crosses at the moment. It's such a wonderful country with lots of skinheads. Yeah, great country to live in. It's true brokers do too, in my experience. I think I'm lost in your conversation. How do you think if I trade 5% risk of my account? I'd say 5% is very large. But yeah, I wouldn't say, if you're, it sounds like you're relatively new to trading, so I'd say using 5% is a very, very bad place to start. If anything, use like 0.25, 0.5. That way you have room to take losses, which if you are new, you will be taking losses and you will likely be unprofitable. So at least minimize the risk. So even like 0.1%, using 5%, you're going to just burn through money. Because bearing in mind, if you lose 5%, you don't just need to make 5% back. You need to make more than 5% back to get back to break even, because obviously your capital is now decreased from that. Around an hour and a half flight from Miami. Oh, interesting. Okay, I will definitely come and visit when I'm there. Well, once I'm to the UK, we'll never come back. I don't blame you. I don't think I'll be coming back. Okay, guys, Chris is here to take over the show. I appreciate you all taking time to spend with me today. I think I'm on later this week. It might be tomorrow or Friday, not sure. But guys, have a great one. I will see you all very soon. Don't get margin called. Have a good day.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Wednesday, happy NVIDIA Day. We'll find out what happens after market. That's going to be the big news today. I mentioned this yesterday in my final hour YouTube session. NVIDIA means a lot to the market as it has grown, a ridiculous amount over the last 2 to 3 years. I said this yesterday. So NVIDIA is 19% of the weight of SMH, which is a monster weighting. NVIDIA is 7% weight of the SPY, and NVIDIA is 8% weight of the QQQ. So there is a lot riding on this particular earnings report. The trend continues to go higher. I think what's going to matter, it's going to be price action, whether it's a good earnings report, positive guidance, who knows? Like, nobody knows. But I think that between NVIDIA here trading at 131, I don't know how much of a reaction we're going to have. The market's anticipating, I've calculated about a 10% expected move on NVIDIA. That's roughly, average for earnings over like a 10 to 14 day window. So, that puts us up into the, 140, maybe the 144 zone, 145 zone, or that puts us down into the 15, 16 zone. If we get any follow through. I think there's so much anticipation around this. We could also see that price doesn't necessarily go as far as people want, and maybe that makes it even trickier. So I don't know. It's an up, down, sideways. We'll figure it out. It's nice to see some green in the portfolio, despite a little paper cut that I took this morning with a directional push. So it's been an interesting last couple of days with some of the day trading that I do in SPX. Typically, we see a lot of indecision, and it's easy to carve out a little bit of profit in the morning. But we've had direction. Even this morning, direction. That's 5 days in a row, which is very unusual. It is what it is. But I grew a little frustrated today with just seeing price just not even like a calm, chill open. It's like the market just wants to churn and grind and drift, and me no likey. So still got one position on. Let's see what happens. I need this thing to recenter a little bit towards like 59.90, 59.85, and I'll grab a little winner there. So we'll figure it out. But P&L on the day is good. I did end up taking some profits off the table with a couple of trades. My Japanese yen futures trade. This is /6J. So I took profit yesterday on this trade. I was up $450. It's just shy of the max risk. So I was risking $687. This trade was out to September. I said this when I took this trade in the very beginning. I like the trade, but I don't love that I could only go out to September. And so I've seen a very quick run in profit. And I've got $450. My max profit's around $1,200. But in order to get that max profit, I need price to be greater than this level and also above that level by September. I have no idea what the Japanese yen is going to do, right? So I'd almost rather reestablish another position, see if I can get more time in the futures contracts, and maybe this is setting up some type of bullish pattern here, and then maybe I can trade another leg of it. But meanwhile, I will be watching FXY. If we still have additional strength and flows in the Japanese yen, then FXY are shares that I own. That way I take the time element out of it. So I'm still going to keep that on as a hedge. I still have a bunch of hedges with the futures market. So this kind of short position here, I'm trading a bear put debit spread. So I shorted at the top, and I'm looking at basically incorporating this entire move. So from this long put to this short put, that is a debit of, it cost me about $500, but the max profit is around $2,300. So there's pretty good reward to risk. What do I have to see happen? Obviously, I need to see price continue to fall. It is mainly serving the purpose of, it's like 0.25% risk to my account, and it pays, maybe max of 2%, 2.5% profit, which is fine. But I want to see where it goes. If price goes back up, okay, fine. If we start to see price falling towards the 200 moving average, that is also fine. It's a little bit harder and more unpleasant to see price falling lower, but that's why my hedges are here. So ES is hedging, MES is hedging, I've got some income trades in as well on a lot of instruments. So XSP is one of them, which is like your mini version of the SPX. And I've got a little profit trap down in here. So yeah, I'm positioned for, I've got 9 trades running where if price goes up, I make money. Price goes sideways, I make money. Price goes down, I make money. Price goes down a little bit more. I've got a profit trap in here. That's my perfect spot. But we'll see. So I'm just trying to set it up and figure out what to do next. Mag 7 wise, things responded a little bit nicely. Like Amazon had a nice rip off that 144 moving average. Apple yesterday, not Apple. Let's see, Costco had a nice little run. So I've got a profit trap running for Friday on Costco. This is a broken wing butterfly. Actually, it's not. It's a technically, I guess I call it a call condor. So I have a profit trap up here. I pulled in $1 credit on Costco, and then I have a profit trap that looks like that, and then I've got my risk. So I could max this thing out at about $6, and my risk is I think it's with the $6 it'd be like $1,300. So that's my max risk. Highest probability is I just walk away with $1. That's probably the likely scenario. If price wants to come back up and try to revisit these highs, I've got a little bit of wiggle room right there. So these are, I mean, essentially I took a trade in that allows me to grab some profit and call the top, which I don't love to do, but I thought this was due for some type of reality check, and it's getting one. So that looks good for Friday. And also on Meta, same thing. So broken wing butterfly up here for a small win. It's like 50 cents credit, but a $5 profit trap in case we come back up towards the highs. So I'll just be watching those levels. I already took profit on Netflix. That was a winner from last week. I did have the expiration out to this week on Friday, but I just took it off last week. I had a $1.10 credit, closed it out for a 10-cent, or $1.15 credit, closed it out for like a 10-cent debit. So took a bigger win there. All right, Tesla 295, still sliding. Tesla is a couple of things. Tesla, a couple of dollar cost average levels. So my next one's going to be 285. I mean, I might consider rolling that down a little bit, but these are small allocations. I mean, this is $1,000 or $1,100. That's $1,500. That puts my position a little bit more towards like the 300 zone. And, you know, if we see Tesla get up towards highs again, like that's a good return. It's a small allocation. So I'll just kind of be patient on it. More important would be this was full profit last week. So that 221 expiration was $228 per contract. And then for March, this is a 255. So I've still got some wiggle room here. I mean, 295, we could certainly test, but 255, let me check the options chain here. Okay, now we're seeing some price come back to red. Yep, son of a biscuit. Went right to that freaking expected move. All right, one trade's running. I'm gonna let that thing keep going. Okay, Tesla. Let me check the options chain here. So going out to March 21st on the low end options chain, we could get down to like okay, so expected move gets us down to about 260 to 255. That would be my assignment level. If I was taking assignment, we'd have to have Tesla continue to sell off directionally. So probability wise, we have to have more than one standard deviation of all directional downside move. Could it happen? Sure. But this trade's profitable already. That expired last week. This trade is currently running. So if I get assigned, I would have the assignment 255 would be my assignment, and 5 and 217. So I'd own the shares at 247. I think I could hopefully do some work and repair that. So that's Tesla. Berkshire, just going to stay out of that one. Bonds, pausing on the day, 10-year yields, little green candle. Let's go top down here. SPX. Is Nvidia going to save the market? Is there more pain to the downside? This 144 200 moving average, I'm still watching these levels. This yellow box is where I would like to be deploying long positions. Okay. So I'm not saying I'm wishing for the market to drop, because the way that it feels is always terrible. You know, having 1, 2, 3, 4 days of selling doesn't feel very good, you know? So if this is a high, low, lower high, lower low, I mean, if we don't take out these lows, like, we're still going to deal with all this chop. There's still a lot of potential chopping in here. That could be what the market's going to give us. You know, doesn't really go higher, doesn't really go lower. These would be the guardrails I've talked about for the last few weeks. You know, nothing's breaking. Bond market's not breaking. Equities market's not breaking, despite all the wild and crazy stuff going on. But if it does break to the downside, you know, I think it's going to feel like crap, but I also think there's an elasticity where the market will snap back. So I just want to see if we can get a balanced trade here. Okay. Let's go with, I'm going to take a look at something really quickly this morning. This trade is my call spread. Put spreads in mostly profit, 59.50. All right, let's flip this around. Actually, be a put spread, 59.50. I get anything for that today? So if I pin this thing at today's low, 20 cents credit on the trade. From the open, 56, that's up 40, 50 points. It's not really a great trade. I'm just debating. I've got a trade in that's running right here. 325 trading for 430. I need a little bit more time. I'm looking to see if I can get price to maybe recenter back at today's open. So I think I'm going to do something like this. 59.50. This isn't bad. 10 delta, 45 cents. I think I'm going to take this trade. And as we came back to today's lows, I can trap this thing. Could I go one strike lower? Okay, about 40 to 45 cents credit. See if I can get 50 cents on this thing. So pending order on this, trading at 51 cents. Come on, give me the midfill. 60 cents. All right, I'll try 45. Come on. All right, I'm going to do this. I'm going to put this in pending for $1. I'll let that just marinate. I've still got one trade in for the morning. 59.50. Let's see if that gets filled. All right, let's go top down. So SPX back here. NVIDIA today is going to be probably a 1+% mover in the indexes. SPY, QQQ, market cap weighted. You're probably going to see about a 1% move on NVIDIA, or a 1% move from the indexes or ETFs, because they're market cap weighted because of NVIDIA's influence. There's more influence on NVIDIA's earnings than there was on CPI and there is on FOMC. Like, this is probably the most, like, single-handedly the biggest mover of the year so far. And nobody knows what's going to happen. You know, I do think that earnings will probably be fine. I mean, it's hard for NVIDIA to miss earnings, but it's a matter of, are investors taking their positive earnings as optimism in the future? Is there any type of concern that NVIDIA expresses? Is their guidance a little bit, I don't know. Is it wishy-washy? Nobody knows. So we'll figure it out. But I've got, like I said, I've got a lot of income trades in that are just building up some positions with. I've got a buffer. If price goes higher, life is easy. Price goes lower, I'm braced for that. I'm hedged, and I think that's the reality. It's like I'm just pretty much going to be like, let's see what earnings gives us. Let's see what price is, and then I'll make the appropriate adjustments and reactions. So hedged on futures for right now. NDX, I think let me see if I took a trade on NDX last week. If not, let me see what NDX is trading for. 45, and that's good. That's actually pretty good. I should be able to collect a little bit more premium out of this one. Let me take a look. I don't know what the strikes are going to look like, but let's go to March. Maybe in like the 19.6 or 19.5 zone. So let's go out April 17. So all I have is AM expirations for NDX. What is this nonsense? That can't be right. I'll try the 11th. So if I were to buy, so 25 wide and 20,000. Okay. No, that's just a terrible trade. Just way too much risk. You know, $4,800 risk. The spreads are just too wide. If I move this down a little bit, I don't think I'm going to be able to take the trade that I want to take for less than like $4,000 or $5,000 risk. So, not going to take that trade. I mean, the Ivy rank is good. I just wish that's why I traded the Qs. I traded QQQ last week. So this one actually has less. This is crazy. The QQQ is a lesser Ivy rank than the SPY right now. So I would rather trade QQQ, which I have. I've got some levels way down here. All right, there's my trade. All right, so 520 by 519 for a profit trap, 455 by 435 for a credit spread, wider credit spread. So I should be able to pull in credit about 53 cents per contract. And then if I get the profit trap, that throws an extra buck my way. So $1.53 be my max in that little income trade. Anyway, so just like bracing for potentially some downside. We'll see what everything does. All right. Next up, Russell. Let's talk Russell and Dow. Let's go to SPX here. Keep an eye on that. Let's go Russell and Dow. Dow 437. I still think Russell and Dow, I like Russell less. I like Dow more. I don't know if the Dow is going to be catching a bid, you know, and trying to make some higher highs, maybe reduce the volatility. But part of me wants to look at this. I don't know what the IV is. Let's find out. I might look at an income trade if it's decent. Dow. If I went out to the April 17, that's 50 days out. Look at my levels below, let's say 416, 415. So if I buy, put in a profit trap, 415. That's not bad. Potentially extend this line out. Extend right. There we go. $4.15. It's not a bad income trade. Question is, do I like it enough? Probably on my portfolio margin accounts, I wouldn't mind like this 405. So I've got a profit trap, pull in still $1.40. It's cheaper than the SPY, it's cheaper than the Qs. I think it's less volatility. If I had any ownership, that would be ownership of 405 minus the $1.40. minus the dollar profit trap. So that would be a 405 minus 1 minus $1.40. 402.60 be my ownership. That puts me down about a 10 delta, which shows me probability wise we're 90% chance this thing finishes out of the money, which means unlikely getting an assignment. But I would tie up some capital. I like the Dow enough. It would just be kind of serving as like a glorified cash secured put. Don't mind the trade. Not a bad trade. I think I'm going to take this on my portfolio margin accounts. So you can see I get $1.40. $1.40 not filling. $1.39. Well, heck. $1.38 just got filled. Okay, and this one. And this one. All right, added that in. So that is basically a naked, it's a cash secured put, not a naked put, cash secured put with a little profit trap. So this is DIA. April 17 expiration. Buy the 437 put, sell the 436 put, sell the 405 put, $1.37 credit. And I'm willing to own it. That put my break even at 402.60. If I took on any shares. Unlikely to get assigned, but that's the trade. Okay, I'll get that posted in the Pulver alert section. So I like the Dow more so than the Russell. 405, that's fine if I take any assignment. This one is done. If we go to higher highs, easy peasy. That's just $1.37 that becomes, income. Russell, probably good on the volatility side, but I just think small caps, unless we get like a heavy amount of rate cutting by the Fed, I don't think we're going to get a bunch of awesome direction on the Russell. So I think Russell growth. This one has a pretty impressive bar count. I don't know. I hate to say I'm going to wait for another 200 moving average to get hit, but that's probably what I'm going to wait for. I'll wait. IWX. I should have just bought this thing off the low. But anyway, I'll wait. I want to see if I get something better. I like the value play. I like this pullback towards the 200 moving average on Russell. This is IWY. Probably just a dollar cost average position there. VIX is down slightly. Dollar index slowly sliding into the 106, 105.50 zone or 106.44. If the dollar is going to catch a bid, I do think this is the area that the dollar may be done selling off. It would be nice if the dollar goes lower. That's great, but there's some pretty good support on the daily time frame right at this 200 moving average. So if we pull back into that 200 moving average and we break the structure or we start to bottom out, I would not be surprised to see the dollar range. Doesn't mean that the dollar's got to go crazy up, but I think a dollar range, at least finding some interim support. Previous highs here that can offer some dynamic support. Okay, oil. I am glad I'm staying out of oil. It was initially I took that iron condor trade, and it is not staying centered. So I'm glad that I'm out of it. I don't know if we're going to get a chance to see oil support here around that $66, $67 zone. And if that's the case, I'll probably just take another debit spread on crude oil futures. So if we're in this price point, then I probably go 30, 40 days out, see what that looks like. Let me take a glance at one instrument here. I want to see if we are due for an expansion. on gold or on oil. Let's go here. Yeah, I mean, oil's trying to make a move. So lots of support, starting to build up it with some volatility. That did it for quite a while as well. There just seems to be like a lot of coiling in oil. So yeah, I think a little bounce there would be probably my next trade. It would just be defined risk. I mean, nobody knows if oil is going to be steady and stable at this $66 handle or if it just gets a little nastier. This support level's held basically since 2022. So I don't know. It's tough. If it holds and it's a nice floor to trade from, then I wouldn't mind going long oil. But probably just with defined risk options. Natural gas, I'm still long UNG. Gold has had one decent red day. That's it. Gold is still pretty strongly bid. I'd like to see a pullback. I want a pullback before I add any more positions. If I get the pullback to previous all-time highs, pull back in some of my dynamic moving averages, then I'll probably add in some GLD and GC exposure. Until then, I'm just staying out for right now. Silver, a little bit of a pullback, which is fine. 29 support, 26 support. Looking to see if we keep grinding higher towards 36. Bitcoin hitting the 200 moving average on the daily time frame. Look, it's pretty simple. If Bitcoin is back above 91,000, that's probably a good sign for the bulls. If we slide lower, we have a break, retest, and a slide lower. This previous resistance would be my next support zone. So you're going to have to see if the Bitcoin bulls are going to step up. If so, where? But either they get back above 91K or we bounce back around 75,000. Looks like my feed is here. All right, just setting a chart alarm. Okay, move this out of the way. Okay, that's my Bitcoin look. MicroStrategy at 255. I did close out a put yesterday. I added a new collar in, but I've got the collar now in 310 by low 200s. My break even is 263. I'm still looking at covered call at 310. And just in case if Bitcoin does bounce and MicroStrategy goes with it, then getting back to 305, 310 is fine. My covered call that still exists into May is looking pretty good. I have that one MicroStrategy. So my covered call at 310 it's paid out about $3,900 right now, about 64% of the way there. I'm just gonna let it keep decaying. That's all we need. But I don't want to sit there and chase it, like a fool. I mean, I obviously want to see a bounce, and I measured this one out. So high, low, lower, high, lower, low. We did hit symmetry. We're hitting the 200 moving average. There's previous resistance here that could also offer some support. We also fell pretty inefficiently the last 3 candles. So, again, Bitcoin's going to have to be the proxy. It's going to have to go up. Bitcoin goes up, MicroStrategy probably goes with it. I'm sure the whole time this has been falling, Michael Saylor's like, let's buy more Bitcoin. So it's not like they don't have it on the balance sheet, but they are pretty much tied to if Bitcoin goes up, MicroStrategy looks good. Bitcoin goes down, who knows? This one, I might end up taking some assignment of Coinbase, which also makes things really interesting. I'm not interested in really owning it, but if I did, it would be around like $180, $88. If I owned it here, it'd be something around $145, $146. So 188.93 break even, 147. Again, probability of this trade still pretty low. We've had a pretty aggressive sell-off. Again, just following suit with Bitcoin. Ethereum, also not performing well, haven't broken the trend line. I wouldn't touch Ethereum until we get on the right-hand side of this. Copper, a lot of volatility on copper. Let me check and see how that trade's doing, actually. So /HG. Right now, copper is about break even on my trade. This is a 111. Is with it. I guess it's a spread, so it's a 1111. But if I win on this trade, it's an income trade for 160 bucks, and I need some more time. This is only out to April. It's not that big of a deal, but let's give it a chance. Okay, actually, copper's up about, yeah, it's up a little bit. It's positive, but barely. So net, it should be worth about $1,000. It just has to stay above 418. 4.18 is the line in the sand for me. Japanese yen, like I said, I closed this one out for profit. I will reestablish. I don't know if the contracts have changed at all. Japanese yen, I can still go to September, so they haven't changed. If I get contracts on Japanese yen futures that go out to December or into even Q1 of next year, then I would also consider trading another Japanese yen. It to me, it's like a hedge trade. It's I don't know. I think the Japanese yen has had lots of manipulation. It might be the one central bank that's still going to be raising rates, and it certainly tends to be a risk-off currency when things get a little gnarly. So, but I want to trade further out than just September. What else we have here? DAX, just like that. DAX is right back up towards the highs again. Crazy. I don't know what to really do with this other than, I mean, I'm kind of hoping we have a dip or a pullback. I just don't know if we're going to get it. You know, this might just be a bull flag, which seems insanely aggressive. That I don't know if I can buy that. So I do have position in an FEZ. I took in some puts on this one. So FEZ. FEZ is 49 put, 48 put, 47 put. I just put in some cash secured puts, cheap price, out of the way. I ended up pulling about $3 of income out of that, and just need some time. Those trades are out for, that was a leap actually. And that's it for right now. But I mean, if this is going to be one of the best performing indexes, like, I mean, money seems to be finding it. Money seems to be finding China. Money seems to be finding Europe right now, and that's probably good since the U.S. is still kind of sideways and choppy, and nobody knows what we're going to get out of the U.S. this year. It's been a great run since 2022, a bottom in 2022, but I think it's kind of topped out a little bit. UK also fighting back a little bit in a big way. Nice. Argentina sideways, super choppy. Could I don't know. This is a interesting play, but ARGT. Could I do a strangle on this thing? March 30 or March 21st out 23 days. Let me see if I could set up $90. No, premiums are just terrible. I was going to look at like a strangle trade. If I did like a 91 or 92, but that only offers like 20 to 30 cents credit. So that's a horrible trade. Never mind. I'll just wait. China up to some fresh highs. Hooray. That probably means that my JD stock is doing fine. JD at 43, earnings this next week. All right, let me take a look at this. I might roll this. Look at JD really quickly. So I have a covered call at 39 that gets called away this week for profit. If I roll it out through earnings next week, probability of JD getting below $39, probably pretty slim. If we have a positive earnings print on it as well, man, I think I'm gonna try to roll it maybe a week. Let's see. So JD here, I have the shares covered at 40. I did roll it. Well, I guess I'm taking on the risk, huh? It's still in profit. Gets called away for, $4 or $5 a share. It's fine. Well, I guess I'm going to deal with earnings. Thought I was still debating that. This one, yep. So rolled it to March, taking on the earnings. That's fine. This account here. Shares rolled. Okay. So never mind. That back and forth, I ended up rolling it. Good. So that updates JD. 35.92 is my break even. 35.92 break even. 3/21 expiration. $40 cover call. So I own the shares, and yes, I'm sacrificing some upside, but I'll take the $4.08 of profit on 1,500 shares. That's a pretty good chunk of profit. So 408. So $6,000 into March, as long as we stay above $40. Not bad. I like these two stocks as well. SEHD, SEHG. Honestly, favoring SEHD for dividends over growth right now, just in case there's an exit. And that's, if it feels a little bit like the top in 2021 or rolling into 2022, if the market's going to move away from growth and momentum and go into more defensives, go into lower beta, momentum stocks is not where I want to be. I want to reduce as much volatility as I can, still generate the income. But I do not want to have like a bunch of stock picking drama if, Palantir's down 30, 40%, MicroStrategy's down 40, 50%, Carvana's up. It's like all those big turns we've seen the last like 20 to 30 days. I don't want to deal with all that crazy volatility. So anyway, I think SCHD is a good play for 2025. It's also dirt cheap. There was a split in this one. So there's a 3-for-1 split, and you got a solid dividend at 3.5%. Not too bad, plus the price appreciation. This is kind of like an inexpensive way of trading the Dow, in a way. It's not the Dow, but it is a decent basket that's also pretty inexpensive. So a nice alternative to playing the ETF DIA. Okay, any questions, any thoughts, we want to talk currencies. Dollar was up, pound is up. Japanese yen volatile, Asia currencies. So Japanese yen down a little bit. Australia, New Zealand down a little bit. Take a look at my Swiss pairs right off that 200 moving average. Well, I guess the time to wait continues. Still holding some carry. CAD Swiss still holding some carry. Probably loading back up into here. Maybe loaded into the flash crash. Just going to be patient. Got to be patient. Euro Swiss better, but same thing, just not really getting much follow through. Pound is okay. Pound's looking a little bit more resilient. See if we can break some recent highs. Kiwi Swiss also revisiting maybe equal lows here. A couple levels. Do we hit the lows? Do we hit the lows? Keep an eye on it. Dollar Swiss. I wouldn't mind reloading here. If we come back down to maybe like the 786, 86, 100% zone. If we pull back that far, I would probably load back up on dollar Swiss longs. I like that trade actually. Otherwise, I'll stay out of it. I think this is just a large range. So we're coming all the way back down here. If so, I'm going to scoop up buy trades and then take them back up towards 92. So I'll watch that one. Aussie CAD. Still long on this one. New Zealand CAD, I'm still long on this one. Euro CAD, all sorts of chop. Pound CAD. A lot of volatility there. These, pound crosses are nuts, man. It's like straight up, straight down, straight up. That is not a fun environment to trade. If you're scalping, maybe, but it's not my style. So not sure if everyone's enjoying the yen crosses or not enjoying them. I don't love them personally. But pound dollar, if we keep resistance here and roll over this trend line, that's all going to be like dollar index related. So euro dollar, pound dollar, watching the dollar index pretty closely. Euro dollar back to 105. If we're going to have a shorting opportunity on euro dollar, this is probably a good spot to look for it. If we break this trend line, see this 106 handle act as resistance, then maybe a short stop loss and then revisit the lows, get some asymmetry. Maybe this discussion of going to parity again is a possibility, but the dollar index would have to be looking good. Dollar index would have to go way higher for this thing to be heading towards parity. All right, I need to take a quick peek at my SPX trade because it's probably not looking good. Son of a biscuit, man. All right, I got to watch this one. If this gets to 650, I got to close it. Okay, I'll keep an eye on it. Euro Aussie. I think this is range bound. So, I mean, there's an intermediate range in here. I would prefer to look at a sell opportunity all the way up towards like this 1.7 handle. But this looks like a bullish play to me. So if this is a big flag, I mean, support was at 164. We could be hitting, checkpoint one at 167 or so. If it goes higher, then take it up towards a 169, 170 handle. It looks a bit more bullish to me just because of this support. But we're right in the middle. This is my least favorite way to trade currencies, is right in the middle. It's like this is a fight, back and forth. So I don't love it. Euro New Zealand. There could be some resistance here, but man, this looks like it could be breaking out. We had a lot of lows down here. This market's making higher lows right now. So if there's a breakout here, we could be breaching new highs, stop loss below, maybe seeing a breakout trend. But those are tough trades. Like pound Aussie, pound New Zealand, they're quite volatile. I mean, the daily time frame, the structure's held really nicely. Higher lows for quite a while. Higher lows, higher highs. So is it channel, and then we have retracement, but that could be the trade. Pound New Zealand's same thing. 200 moving average on the daily seems pretty supported. But yeah, I'm pretty light in currencies right now. It's mostly just Swiss pairs that I'm in, and I'll still just level into them. Aussie CAD I'm long. Aussie New Zealand I'm still long here as well. Nothing crazy. Aussie CAD long, New Zealand CAD long, Aussie Swiss, CAD Swiss. Closed out my Swiss yen. Yep, closed out Swiss yen near symmetry. That was fine. That's about it. So, look, here's the deal. Tomorrow earnings, or today after market earnings. Nvidia is what all eyes will be watching. This has the ability to influence the S&P, influence the NASDAQ, influence anything semiconductors. Okay, it has some weight in this as well, but it's mostly SMH. So it's a big spot here, SMH sitting right at the 200 moving average. It's either we hold this level and Nvidia earnings helps this thing pop right back up and it renews the optimism in AI, or if it pushes lower, we're going high, low, lower, high, lower, low. I wouldn't mind scooping up some SMH later, but if we are going to dump momentum stocks, do not try to catch those bottoms. In fact, if anything, I'm probably going away from momentum stocks, away from growth stocks, and going a little bit more defensives and lower volatility. I do not want to be a stock picker when things can be dropping 40, 50, 60+%. Because that 40, 50, 60% could become 80, 90%, right? You could turn it into a Trump US dollar. Where's the Trump US dollar spot? Is this it? There you go. There's your 90% pullback, or looking at like a Palantir. I mean, what was the best performing stock of 2024 is now down 30% in the last like 4 days. It's crazy, like the last week or so. So just gets a little gnarly out there. Don't be a bull market genius. Aussie dollar, New Zealand dollar. New Zealand dollar, I'm still long. I'm still holding New Zealand dollar. Aussie dollar, I closed. Yep, I closed out Aussie dollar for a win. I had 2 winners, 1 break even. I got out of that trade. So I'm done with this one. I'm still looking to buy Aussie dollar at 60.20. New Zealand dollar, I'm hanging in there a little bit longer. A little bit longer. Yep, but dollar CAD I closed, dollar Swiss I closed, Swiss yen I closed. I'm still holding a lot of the other Swiss crosses. Okay. All right, that'll do it for me today. Enjoy the rest of your day. NVIDIA earnings after market. Let's see what happens. We'll talk through it mañana. All right, thanks everybody. Have a good day. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.